Hello, before we start today's video, just a quick note that if you are interested in purchasing this indicator, just simply email us at daytradinggps@gmail.com to request a discount promo code. In return for you taking your time for watching this video today, you can email us and request a discount promo code that will give you a substantial discount on the purchase of the indicator. All of our indicators are sold on a one payment for lifetime access basis. Thank you. One more thing before we get started, you'll see in the description of the video there will be this section here, which is click on this link for descriptions links to the other videos mentioned in this preview on different topics about the SPX indicator. So this is a Google Drive link. I'll show you where it takes you to now. So when you click on that link for the Google Drive, this is where it takes you to, which as you'll see is a list of different topics and links to the videos on the specific topics. These topics go into more detail. We may reference some of these topics very briefly in today's video, but when we reference to go look at the video that provides more details, then you'll just simply click on this link and go to here, and then you'll be able to click on the link that you want to see a more detailed video on a certain topic. Thank you. Hello, in today's video we'll be taking a look at the Monday, November 10th, 2025 trading session for the SPX CBOE index. We'll be utilizing the SPX Daily Key Levels indicator, and specifically we'll be using the V2.0 version of the indicator, which was just released a few weeks ago. Okay, so some of you may be already familiar with how this indicator works, but for those who are not familiar with it, I will briefly run through how this indicator works. You can also look in the description of this video for links to other SPX trading sessions that may go into more detail than we are going to go into today on how the indicator works. Also, as mentioned in the preview, to this indicator, there's also a link to a Google Drive document which has links to specific topics on this video. So if you click on that link, you'll see links to other various specific topics on this video that go into more detail. Alright, so the way this indicator works is it works on TradingView platform only, and it works on two different SPX trading symbols. One is the SPX CBOE symbol, and that would be for putting into your symbol search SPX, and then you'll see a list of SPX symbols, and you'll look under the one that's SPX for the CBOE exchange. And that is the official CBOE SPX index that everyone follows for SPX. You would use this indicator on that particular symbol for trading SPX index options, and that is the main strategy, the core strategy of the Daily Key Levels indicator is trading SPX index options, specifically either 0 DTE options or, if you prefer, 1 DTE options. This indicator is for day trading only. It is not meant for swing trading. So what that means is that whatever option trades that you will be opening during a session, you'll also be closing them during the session. You will not be holding them over overnight until the next session, or holding them over a period of days. It's meant for intraday trading only. So all positions that you open during the session, you will be closing before the end of the session. This indicator also works on a second SPX symbol, which I'll show you now. The second symbol that it works on is the SPX 500 8-cap symbol. This is a Forex CFD, so in TradingView you would type in SPX 500, and then you would look for the SPX 500 symbol under the 8-cap exchange. You would use the indicator on this particular symbol if you, instead of trading SPX index options, you instead are trading SPX through a Forex broker. Or if you're taking a trading challenge, then most of the trading challenge companies are Forex based, such as FTMO, Apex, and the 5%ers, and there's about 60 or 70 other ones in which you can pay to take a trading challenge, and if you pass the challenge by making a certain amount of profit while not incurring a default on your either your daily loss limit or your total loss limit, that you can qualify with those companies to get a funded account and trade with their risk capital. Since most of those companies are Forex based, you can either trade Forex currency pairs such as Euro USD or USD JPY, or in the case of indexes, you would trade a Forex CFD, such in the case of SPX 500. So if you were taking one of those trading challenges through one of those companies, you could use this indicator on this symbol for trading SPX through a Forex CFD. Another reason why you might want to have a second chart opened up with the SPX 500 8-cap symbol, even if you are primarily trading SPX CBOE index options, such as the core strategy we'll be showing you in this video, is because while it's on this particular symbol, you can get the levels for CBOE SPX 30 minutes before the 9:30 a.m. market open. So the SPX opens at 9:30 a.m. Eastern New York time each day. The CBOE SPX index does not trade in the pre-market and overnight, whereas the SPX 500 does. The way TradingView PineScript coding works for indicators is that if you have an indicator that is already determined what the levels are going to be for that indicator for that particular symbol, such in the case of CBOE SPX, and if that symbol at the time the indicator knows the levels, which in this case is 9 o'clock Eastern New York time, 30 minutes before the CBOE SPX index opens at 9:30, since CBOE SPX is closed, does not trade in the pre-market, the way TradingView PineScript works is that it cannot show the levels, even though the indicator knows the levels, until the first tick of the 9:30 a.m. Open, while your indicator is on the SPX CBOE chart. So while it's on the SPX 500 chart, you can get those levels 30 minutes early at 9 a.m. via this second table here, which will show you the CBOE SPX key levels for today's session. This table here is for the SPX 500 8-cap symbol, and the levels here shown on the chart are for the SPX 500 8-cap symbol. So this is the table you would look at for the getting the levels early for the CBOE SPX. Alright, now we'll go back to the other chart. Okay, so in today's session we're going to be looking at many different trades. There really wasn't enough room to put them all on one chart. So as you can see here, I have several tabs open and I put the different trades that we'll be going over on different charts because there simply wasn't enough room to put them all in one chart. Okay, so the way this indicator works, continuing on with that topic until before we get into the trades for today, is at 9:30 a.m. Eastern New York time, you will get on the first tick the key levels for today's session for CBOE SPX. The main key levels that the indicator provides each day are going to be, first of all, the SPX Bull Bear KPL, which stands for key price level, which for today's session was 67.9426. The indicator also provides main R levels above the Bull Bear KPL and main S levels below the Bull Bear KPL. So as you can see here in this table, those range from R1 to R6 above the Bull Bear KPL and S1 through S6 below the Bull Bear KPL. The reason we don't have all 6 above and 6 below on our chart here is because we're zooming in to the price action that is normally occurring with SPX in the beginning of the session, which is generally either going to be R3 through S3 or R2 through S2 in most cases. So for example, if I had all 6 of them, then as you can see it looks pretty squunched up. So you would only incorporate these levels later on if price action was moving in the direction of those levels later on in the session. To begin it, you simply take your cursor over here and drag it up like this, and then you can zoom in as we are doing here. Okay. The other levels are the midpoint levels that you'll see here that are currently only turned on for the midpoint levels above and below the bull bear KPL. The midpoint levels represent the mid levels between each of the main levels. So for example, we can go in the user control panel and we can turn on the midpoint for mid R1, R2, and it would appear here. Mid R2, R3 would appear up here. Mid S1, S2 would appear here, mid S2, S3 would appear here, and so on and so forth. But at the beginning of the session, most of your trades are going to be centered around the bull bear KPL in the beginning moments of the session, especially the 9:30 a.m. candle open, if that is a trade that you choose to take. And usually in the first moments of the session, it could be the, every session is different. It could be the first 5, 10, 15 minutes, or 30 minutes. And in some cases, as we saw in this session, price will come back to the bull bear key price level later on in the session as well. Okay, so with here, you also see these QL levels. So the QL levels are available above and below each of the main levels. So the main levels on this particular indicator are the bull bear key price level, R1 through R6, and S1 through S6. So both the midpoints and the QL levels are available to be turned on above and below each level. The QL levels above and below each level serve as the tight stop losses depending on whether you are taking a bullish trade or a bearish trade off of the particular level. So in the case of the bull bear key price level, a bearish trade off the bull bear key price level, or abbreviated BBKPL, a bearish trade off the BBKPL, your tight stop loss would be the QL above. And on a bullish trade on the bull bear KPL, your tight stop loss would be the QL below. Your standard stop loss on a bearish trade from the BBKPL would be the first midpoint above, and the standard stop loss on a bullish trade from the BBKPL is the first midpoint below. And it works the same on every one of the other levels as well. So you can take bullish or bearish trades off of any of the main R levels, the main S levels, or the main bull bear KPL level. So for example, if you were taking a bullish trade off of R1, then your tight stop loss, if you choose to use that, would be the QL below R1. So you would just turn that on in your user control panel. Whereas the standard stop loss on a bullish trade from R1 would be the first midpoint below, mid BBKPL R1. Same thing down here. Bullish trade from S1, the tight stop loss is the QL below S1. Your standard stop loss on a bullish trade from S1 would be the first midpoint below S1, mid S1, S2. And it works the same in reverse on bearish trades. On a bearish trade from R2, then your tight stop loss would be the QL above R2, and your standard stop loss in that bearish trade from R2 would be the first midpoint above R2, mid R2, R3. And the same thing works on bearish trades off of other levels as well. your tight stop loss is the QL above that level, and your standard stop loss is the first midpoint above that level for bearish trades. You'll also see these other levels here, the PMH, the PML, the YDH, YDL, and YDC. These are also important key levels. The PMH is the pre-market high for SPX. The PML is the pre-market low for SPX. The YDH is yesterday's daily high, which in this case would be, since this is Monday, it would be Friday's RTH session, or think of it more as the previous day's RTH session high. The YDC is the previous day's RTH session close, and the YDL is the previous RTH session's low, which you can't see because it's so far below. So if we go down here, then you will see it down here. Okay, so the first trade here, we have the 9:30 a.m. candle marked off here. Under this strategy, the 9:30 a.m. candle is an optional trade. It is not mandatory, or there's no rule or obligation that you have to take the 9:30 candle trade. You can simply wait till later on in the session and take a bullish or bearish trade off of any of the other main R levels or main S levels, or in the case of the bull bear KPL, if price gives you another opportunity on the bull bear KPL, whether that is a bullish or bearish trade. If you are going to take a 9:30 a.m. candle trade, then there are some rules about what is within range and what is out of range on a 9:30 a.m. opening candle for taking a trade off the bull bear KPL. There's a, if you refer back to that Google Drive link I mentioned earlier, that is a link to other videos on other topics. One of those videos and one of those topics is 9:30 a.m. opening candle trades to avoid. And so if you go click on that link and want to take a look at that video, then it will go over how you determine 9:30 a.m. candle trades to avoid. Those typically happen sometime between 5 to 10 times a year, so they are rare occurrences out of the 250 to 255 trading sessions per year, but it is important to know if you are inclined to take 9:30 a.m. opening candle trades. This candle is within range. Oh, also that video has an accompanying PDF document which also goes into more detail that accompanies that video, and there's also a link next to that video for that as well. Okay, so this candle is within range. I'm not going to go into that topic anymore. You can simply go look at that video and read that document if you wish. But this candle is within range if you do want to take the 9:30 a.m. candle. As you can see, we're on a 2-minute chart. That is the recommended chart time frame for this particular strategy. You also can use chart time frames of 1 minute up to 5 minutes for this particular core daily key levels strategy. The indicator itself will work on time frames from 1 minute up to 30 minutes. If you put it on anything above 30 minutes, there will be a disclaimer that will come up on your chart telling you to put your chart back to a time frame between 1 minute and 30 minutes. But 2 minutes is the recommended time frame between the 1 minute to 5 minute zone of time frames to use for this particular strategy. And if you look on all of our other SPX videos when we demonstrate the indicator, that is the chart time frame that we use, the 2 minute, as we have found that provides the most consistent results and the most trading opportunities. Okay, but everyone's different. Some people prefer 1 minute, some people prefer the 5-minute candles, some people may be using other indicators that they like in conjunction with this, whether it's moving averages or other types of indicators, and if you prefer a different time frame, just please keep in mind that with this particular core daily key level strategy, that the recommended time frames are between 1 minute and 5 minutes. Okay, so this opening candle is the 9:30 a.m. candle. It is in range. As you can see, it opens up below the bull bear KPL, crosses over the pre-market low, also crosses over the bull bear KPL, and closes above the pre-market high as well. But it is still within range, and it also, the most important aspect of this candle is not the closes above the PML or PMH, although that is important in context. The most important as far as an entry signal for a trade, a bullish trade off the bull bear KPL, is that this candle closed above, and it closed above within the acceptable range of the bull bear KPL. So if you're inclined to take the 9:30 a.m. candle trade, this is your bullish entry signal. Now, as far as what specific strike of SPX options that you would use with this particular trade, there are 3 different strikes you can use. So on any trade that you take off of any main R level, main S level, or the bull bear KPL, there are always going to be 3 different strikes that you can pick from. And one is going to be an at the money strike, and then 2 of them are going to be out of the money strikes. There's also a more detailed video on that shows the process of picking the strikes for the different levels for bullish and bearish trades, which is also in that link that I described earlier to that Google Drive document. So if you want to see more detailed video on strike selection, then you can watch that video. However, for this particular trade, the way that you would go through that process is that the standard play for this strategy is an at the money option. In this case, since it's a bullish trade, it's going to be a call option. So the at the money is going to be the closest SPX call option strike to the level that you're taking the trade from. In this case, the bull bear KPL 67.9426. So that's a 67.95 call option. The price on this candle close for the option was $17.55. So that is $1,755 would be the purchase price to purchase one of the at the money 67.95 call options. As if you're not familiar with how options work, when you're buying options and you're just straight buying options, you take the price of the purchase price for the option, multiply it times 100. That is the cost of one option. So if you bought one of these, it's $1,755. If you bought 2 of them, it's 2 times that. 3 of them, it's 3 times that. 10 of them would be $17,555 if you were buying 10, as an example. Now, how do you figure the out of the money strikes? You simply take the level that you're trading from, in this case the BBKPL, the direction that you're trading, in this case bullish, so we're looking up. You look up, and the first midpoint level above the level that you're trading, what is the closest strike to this level? 68.0345, and that is going to be the 68.05 call option. The buy price on the candle close for this option was $12.10. Now, what is the furthest out of the money you can consider? The furthest out of the money you can consider is 1 full level away. So whereas this was the first midpoint above, this is the first full level above. What is the level we're trading? What is the direction we're trading? 1 full level above, R1 68.1263. The closest SPX strike to that is the 68.15 call option. The buy price on the candle close, $7.80. Now in this particular session, the entry here hit the scalp exit at 9:46. So basically about 15 minutes later, you had an opportunity to close out this trade. The way this strategy works is there are two different types of trades with this strategy. So before you place a trade, it's a good idea to have an idea whether you're going to place one type of trade or the other. The first type of trade is a scalp trade. Using this indicator, a scalp trade requires a one level move in your favor, and then you close out your trade 100%. There's no adjustments. There's no scaling out. You close out whatever amount of contracts you have, whether it's 1, 3, 5, 10, 20 or more. However many you're trading on scalps, you close out 100% when it hits that one level move in your favor from the level that you're trading. In this case, the level we're trading, the BBKPL, bullish trade, one level above is R1. It hits R1 here on this wick touch. As you can also see, there were a couple of other wick touches here, and on this wick touch, it hit, it went slightly above the 68.1263, and thus you would close out all of your contracts. The other type of trade that you do with this indicator is called a regular trade. A regular trade differs from a scalp trade in that when a regular trade hits the minimum required level move in your favor, you have several options as to what you can then do. One of those is closing out 100% of your contracts. The other option is adjusting your stop loss to break even, which, going back to this trade here, this is a bullish trade. Our tight stop loss is the QL below the BBKPL because that's the level we're trading from. And our standard stop loss was this midpoint level, which is all here in the notes. So on a regular trade, when it hits the minimum required move, which in the case for a regular trade is a 1.5 level move in your favor, as opposed to a scalp, which is a 1 level move in your favor. When a regular trade hits the 1.50 minimum required level move in your favor, you have several options. One is 100% closeout. The other is adjusting your stop loss to break even, which in the case of options is now changing your stop loss to a price-based stop loss. So in the case of any one of these options, break even would be the price that you paid for the option, or you can do break even plus an initial 10 to 15% profit buffer on top of break even. So you would simply add 10% to 15% to each one of these if you want to add a initial profit buffer instead of just doing break even. Then at each succeeding level move in your favor, at that point, each succeeding level move in your favor is either the next main level up or the next midpoint level up. So at every main level and midpoint level above, exceeding the 1.5 level minimum required move, then you would have the same decisions to make at each one of those additional levels. So for example, and the other option that you have only has to do with if you're trading multiple option contracts. So for example, if you were trading 4 or 5 contracts, or 6 or 7, or 8 or 10 or 20, etc., then the last option that you would have when it hits the minimum required 1.5 level move is that you would close out, scale out 70 to 90% of your multiple contracts, and then on the remaining runners you can adjust your stop loss to break even or break even plus the profit buffer, and then on those remaining runners, if the move keeps moving in your favor at each succeeding level in your favor, then at that point you would have the same decision to make. Either you can close out 100%, further adjust your stop loss, add more profit buffer, or simply just close out any remaining contracts. Okay, so when it hits the R1 here, that on the high wick touch, that's the closeout for a scalp trade. I have two different prices here. One is on the high wick touch, and the other is on the candle close. So if you're using a broker that allows you to place take profit orders based on the underlying price of what you're trading, in this case SPX, there are two brokers that allow that. One is Thinkorswim has that feature, and also Interactive Brokers offers that feature. They offer that feature both on take profit orders as well as stop loss orders. So you can place a stop loss order based on a level on the underlying, and you can also place take profit orders based on the price of the underlying as well. There is also a link to a video on that in that Google Drive link as well that you can watch on how you can do that in Thinkorswim. For Interactive Brokers, you can simply Google that, or you could ask their support staff directly how you do that. There may be other brokers that offer that feature. I'm not aware of them, but there may be, so you just have to check with your broker. All of the brokers are going to offer what you would need to do if you're in a regular trade, if you're just then using your stop loss back to break even, because that is a price-based stop loss. So all the brokers offer that. So initially your stop loss on the initial part of the trade is a level. So if your broker doesn't offer that and you don't want to change brokers to one that does, then you're just going to have to manually stop yourself out when you see the candle hit, if the candle happens to hit your stop loss. And the same thing would work in reverse on take profits. You would simply, when price hits, or you can set an alert in TradingView for price touching or crossing above or below a certain level with price. You can set an alert for that, and then you can go ahead and close yourself out, or you can simply wait for the candle close. In this case, the candle close did not work in your favor because it backed off. In a lot of cases, candle closes will work for you, so that's just really up to trader's choice whether you want to do it on a touch of the level or on a close on the candle that actually touches the level, whether it closes above or backs off of it. Okay, so in either case, I've lined out both here the wick touch, high wick touch, what the price was, and then also on the candle close. So on the 67.95 call on the high wick touch, that was 23.61. That's a $606 profit per option. The 67.95 call on the candle close, because it backed off, was 21.60. So if you waited for the candle close, you only got $405 an option. The 68.05 call on the high wick touch was $16.50. That's $440 profit per option. On the candle close, it was $14.70, so that's $260 per option. The 68.50 call on the high wick touch was $10.70, so that's $290 per option. But on the candle close, it was only $9.37, so that's $157 per option. Okay. Well, there's also a second trade here, which is a bearish entry signal on this 10:50 a.m. cross and close below the bull bear KPL. This is also a candle which is within range of the bull bear KPL. So this is a bearish entry signal that is not out of range. And so you can take a bearish, this bearish trade here, and if you take this bearish trade, it's the same process. In this case, you have three options: at the money and two out of the monies. The at the money is going to be based on the 67.94.26, so that's the 67.95 put in this case. Your stop loss is tight stop loss is the QL above, and your standard stop loss is the first midpoint above, because this is a bearish trade. Standard play at the money put option, $67.95. Buy price on candle close, $18. Out of the money strike, this just a reverse of what we did before. You're looking down. First midpoint down is this one, 67.8508. Closest strike to that, 67.85 put option. Buy price on candle close, $13.30. Furthest out of the money, one level down, S1 67.7589. That's a 67.75 put. Buy price on candle close, $9.50. Now in this case, this had a scalp hit, one level down at 11:04. So that roughly is again about 15 minutes later. Scalp only, one level required move, 100% closeout, 67.95 put on candle close. As you can see, this wicked through it and still closed right on it or slightly below it. So on this candle close, 24.60, $640 per option on the at the monies, 67.85 on the candle close, 18.40, profit 5.10 per option. Furthest out of the money, 67.75 put on candle close, 13.40, profit 3.90 per option. All right, well now we're going to go to the next screen, and we're going to look at a bullish entry off of S1. So here you had several opportunities for a bullish entry. Here you have the 1144 to 1154 zone here, which I've had a marker go across the screen to represent those 5 candles. You could have entered anywhere here. However, these buy prices are based on the 11:54 a.m. candle, which is the final candle here. However, these prices would have been relatively the same, or within $1 or so. As noted, you also could have entered earlier on either the 11:06, 11:22, or 11:28 candles here. The stop loss on this trade, since this is a trade taken from the S1 level and it's a bullish trade, then your tight stop loss is the QL below S1, 67.7130, and your standard stop loss is the mid S1, S2, 67.6670. As you can see, if you entered in the early entry candles here, which is fine, you would have gotten stopped out here. So the point I'm trying to make here is that if you use the tight stop losses, you will have less at risk because it's the tighter stop loss. So you'll be stopped out with less of a loss than the standard stop loss. However, the standard stop loss is the recommended stop loss because, as you can see in this example, it is less prone to stop outs. But everyone's different. If you prefer to use the tight stop loss, then you would have gotten stopped out, and you could have re-entered here if you chose to do that. So the entry here we have on the very last candle here. These were fairly similar prices in here. They were a little bit more expensive because these candles had moved up more than these candles. So it was earlier in the session. So if you want to check the data boxes on these candles for these times, then you could have seen what the entries would have been here, and if you had taken this trade, what the stop loss would have been here. This is based on the 11:54 a.m. candle. As you can see, if you entered on any of these candles, you were not stopped out on either of the stops. So if you re-entered after getting stopped out here, again, you would not have gotten stopped out a second time. Okay, so the at the monies is 67.75. Then we have the 67.85 for the first out of the money. Remember, this is the level we're trading. So the at the money is this bullish trade. We look up a half level. That's the first out of the money. The bull bear key price level is one full level above, so that's going to be our furthest out of the money. So in that case, it'd be the 67.95 call. The 67.75 call was 13.50. The call strike based on this level with the 67.85 call was $8.30. And the furthest out of the money, 67.95, was $4.60. At 12:04, it hits the BBKPL. That's a scalp, one level move. 67.75 call on candle close, 24.40. That's a profit of $1,090 an option. 67.85 call on candle close, 16.50. That's $820 profit per option. And the cheapest one, the 67.95 call on the candle close, was 10.20. That's $560 profit per option. Now, as you can see here, there was a little bit of a retrace here, but in the case of a scalp, then it's 100% closeout. And we have not gotten to the minimum required 1.5 level move yet for the regular trade. So here on the scalp, you're closing out all your contracts. At 12:40 p.m., it hits the mid BBKPL of 1. That is a 1.5 level move from the level we're trading, S1. That's one level, another half level, 1.5 levels. The 67.75 call on the candle close is 32.57. Your profit is $1,907 per option. The 67.85 call on the candle close is 23.64. That's a profit of $1,534 per option. The 67.95 call on the candle close, remember you only paid $460 for that. 15.57, profit $1,097 per option. 12.52. Remember, on the regular trade, we have the different options. I'm not going to go over them again. I already explained them earlier, but you do have the different options for either closing out, adjusting your stop loss, or scaling out and adjusting your stop loss. Then, when it moves up to the succeeding levels, which in this case, the next succeeding level is this, 12:52 p.m. hits R1. That's now a 2-level ideal minimum move regular trade. What do we mean by ideal minimum move versus minimum regular move? Well, on low to moderate volatility days, a 2-level move in your favor is typically going to be the end of the road in most cases. On higher volatility days, you can see 3, 4, 5, 6, 7, or even 8-level moves. This indicator, the V2.0 version of this indicator, will go all the way up to R10 and all the way down to S10. So it can handle very extreme volatility situations as well, as we saw during the pandemic, when we had multi-100-point moves a day, and those kind of things can happen every once in a while. Sometimes you go through periods where they happen for weeks at a time, such as we saw with the pandemic. So if we ever get involved in that sort of situation again, the V2.0 indicator can handle extreme volatility situations as well. The general point I'm just trying to make here is that it's fine to stay in a trade after the ideal minimum move, because you never know, it may move up higher and move more in your favor before the close. It's just that the 2.0 level is typically going to be the extent of most moves in the majority of volatility days that you'll see, then that would being low to medium volatility. The 67.75 call on the candle close is 39.24. That's a profit of $2,574 per option. The 67.85 call on the candle close is 29.97. That's a profit of $2,167 per option. The 67.95 call on the candle close is $20.96. That's a profit of $1,636 per option. Remember, that cost was only $460. Now, in this case today, we did get a move up again to a further level, the mid R1, R2 level, the next level up, 1:36 p.m. That's now a 2.5 level move in your favor on a regular trade. So that is again where you'd have another decision to make. 67.75 call on candle close, now 47.20. Profit $3,370 per option. The 67.85 call is now 37.98. Profit $2,968 per option. And the one that we paid $464, the 67.95, is now 28.08, $2,348 per option. Then at 2:50 p.m. it moved up to the R2 level. That is now a 3-level move on a regular trade from S1. So that would be another decision point here with all of those options on the regular trade. The 67.75 call on the candle close is 57.19. That's a profit of $4,369 per option. The 67.85 call on the candle close is 46.90. That's a profit of $3,860 per option. And the furthest out of the money 67.95 call on the candle close is 37.44. Remember, we only paid $460, so now we're approaching almost 8x on this. All right, so now we're going to go on to the next trade. And that's if you missed this trade here off of S1, you had another opportunity to take a trade, a bullish trade off of the bull bear key price level. And that occurs at 12:04 p.m. cross above, close above the bull bear KPL, so it's still within range on this candle here for a trade off of that level, and that is your bullish entry signal. You could have also entered here later on the 12:26 or 12:30 candles, as those are also in range and also entry candles. On those candles, as you can see, there was no the stop losses were not close to being breached on either one of those. On this particular entry, as you can see here, the tight stop loss, the QL below BBKPL, was breached, so you would have gotten stopped out on this trade here. However, the standard stop loss again was not hit, so that stop loss was not breached. So if you had the standard stop loss on the initial trade, you were still in this trade. However, if you had the tight stop loss, you were stopped out, and then you could have re-entered if you chose to here on one of those candles again when it went up again. So if you want to go back and look at the data boxes from the 2-minute candles and see if you had entered here and you had used this stop loss, what your loss would have been here, you could factor that loss in. Or if you used the standard stop loss, then of course you were not stopped out. Okay, so this is still the 67.94.26, so the at the money is going to be the 67.95 call. Our stop losses, as we just went over, are these here. And since we are taking a bullish trade, the out of the money is going to be the first midpoint level above the main level we're trading, which is this. And that is going to be the 68.05 call option. And the furthest out of the money is going to be the one closest to the R1 level, as that is the furthest you can consider, as that is one level away in the direction you're trading, and that's going to be the 68.15. The price of the 67.95 on the candle close is 10.40. Why is it a lot less now than it was back here? Because now we've moved further in the session. We're now a full 3 hours almost into the session, so the prices of the options have come down, because, and mainly because we've now moved closer to the end of the day. So on 0 DT, and by the way, all the options that we're showing you and all of these are 0 DTE options. You can also use 1 DTE options with this indicator, and if you look at some of our other videos, we have some of the videos in the past where we have done a side-by-side comparison of 0 DTE versus 1 DTE, and also showed how those played out over the course of a session and what the additional cost would have been for a 1 DTE versus the 0 DTE, and also how the profits were different on those. So if you want to look at our other SPX options, some of the SPX videos, some of those videos have where we've done that comparison on specific sessions. Okay, another reason is because volatility is not really spiked here. So we haven't really gotten a volatility spike. There hasn't been some Trump announcement where all of a sudden everything's gone haywire in one direction or the other, and so there has been no volatility spike, and we're further on in the session. That's why these are a lot cheaper than they were up here for the 0 DTEs. So the at the money is 1040. The first out of the money is only 550. The furthest out of the money is only 260. So the first out of the money is 68.15. Here at the 12:52 p.m. candle, we get an R1 hit. Scalp only, one level move in your favor, so 100% closeout. 67.95 at the money call. Candle close $20.96. Profit of $1,056 per option. The 68.05 on candle close is $13. That's $7.50 per option. 68.15 that we only paid $260 for is now $690. That's $430 profit per option. Here at 136, we get the 1.5 level move from the bull bear KPL to mid R1 R2. That's where it is a regular trade, minimum required move for regular trade, and you have all those options we talked about earlier. 67.95 call on candle close 28.08. Profit $1,768 per option. 68.05 call on candle close 18.70. That's $1,320 per option. And the 68.15 call that you only paid $260 for is now $10.80. Profit $820 per option. At 2:50 p.m. we hit R2. Now that is the 2-level ideal minimum move for regular trade. 67.95 call on candle close 37.44. That's $2,704 per option. The 68.05 call on the candle close is 27.89. That's $2,239 per option. And the 68.15 call on the candle close that we paid $264 is $18.20 now. So that is $1,560 per option. And if you look at that, that is basically about a 7x from 260 to 1820. Okay, that is going to do it for today's video. And if you are interested in purchasing this indicator, in return for you taking your time to watch this video today, you can send us an email at daytradinggps@gmail.com to request a discount promo code to purchase the indicator. And if you send us that email, we will send you a promo code that you can use for a substantial discount on the purchase of the indicator. All of our indicators are currently sold on a one payment for lifetime access basis. So you make one payment and then you have lifetime access to the indicator, and you will also have at no charge access to any of the updates that we do to this indicator in the future, as well as any future releases that may have enhanced features or additional features. And we are planning on releasing the Daily Key Levels v3.0 in the near future. It will probably be sometime in the next week or so. The price of this indicator will be going up once the v3.0 is released, as it has several new major features on it. And so if you purchase the indicator now before the release of 3.0, then you can get it at today's price and also apply your promo code. And then when 3.0 comes out, then instead of paying the higher price that everyone else will be paying, you will be able to get it at no additional charge because you already have the lifetime access. Okay, well, thank you again for watching the video and taking your time to do so. If you like the video, please hit the like button, as it helps us with the YouTube algorithm. And if you'd like to be notified of any new videos, we do also, in addition to these trading session videos, also do videos on specific topics on this, and we also put out videos on our other indicators as well. So as we do have daily key levels indicators for stocks, futures, forex, crypto, and also the NASDAQ NDX index. Again, thank you for taking the time to watch this video, and we wish you prosperity in all your future trading. Thank you.